What's happening, crypto crew? Welcome back to the channel. If you're new, consider subscribing. We do have new cryptocurrency videos coming out every single day. And guys, I want to get your opinion on all this. I'm going to be showing you guys a Michael Saylor and Raoul Pal video talking about crypto regulation within the United States, how this could potentially harm a lot of the altcoins. Please leave your thoughts in the comment section below. Do you think this could potentially harm the altcoins going forward? Let me know your guys' thoughts. But let's go ahead and just jump into this video.
Regulatory cleanup to be done, and as it happens, you're going to see a shakeout in the crypto industry. Raul, a year ago, I told you sell your gold, buy Bitcoin. I don't think I was wrong. Today, I would say sell your altcoins and buy Bitcoin. The conclusion is you should sell the altcoins. Everybody is overestimating the potential of the altcoins, and they're underestimating the potential of Bitcoin. The value of true digital property that is decentralized, that is a commodity, that is within the regulatory framework is huge and underestimated. And over again, what the regulators are telling you, like these are direct quotes from Gensler yesterday. Stable coins may well be securities. Some tokens are commodities. Many of them are securities. DeFi is decentralized in name only. There are 6,000 projects. While some of these are commodities, many of them are securities under the law, and many of the platforms are. That's what he's saying. He said it 4 times. And he's not wrong, by the way. He's not wrong.
But Michael, making it a security doesn't make it illegal. You just need to register. And if you register, you can do as you wish within the securities laws. So it doesn't actually make a difference. It's not like, oh, everything's illegal. It's like, no, you need to register it as a security and operate within guidelines of the administration that you're in.
Yeah, the point is all the exchanges where these things are trading are not registered with the SEC, and the DeFi exchanges are not registered with the SEC. So the only way they avoid complying with SEC laws is by maintaining that they're commodities as opposed to securities. And as soon as they're deemed as securities, that means that the DeFi exchanges have to shut down, right? And the tokens have to stop trading because they can't meet the requirements of AML, KYC, or they're trading with excessive leverage, or they're trading without the registration statement. So that the entire industry shakes out in a huge way, and it's to the benefit of the traditional institutional investors, to the detriment of the crypto entrepreneurs. The people that are going to be the big winners are going to be the ones that have the publicly traded traditional financial fintech companies, because they can harness this. The ones that are going to suffer from the liability are the ones that are attempting to create their own coins and their own exchanges without filing with the SEC.
Yeah. And let's see. I think people will just file. Once they give guidelines, people should file, and then it's sorted out, and then things survive or they don't survive. I mean, it's as simple as that.
So if they do file, then that means your 20x, your 100x leverage that went to 20x leverage now has to go to 2x leverage.
Good. I mean, good. I mean,
you understand where we're headed.
Yeah, I personally don't use leverage, and I wouldn't.
Which means that the industry matures and it stabilizes, and the volatility decreases, the confidence increases. But the competitive edge of some people in the crypto space, right, is offering that much leverage. And if you didn't have that competitive edge, if you can't offer that range of coins or that range of leverage or the ability to do it without AML KYC, then you're at a competitive disadvantage. You lose market share. So where's the market share going to go? Right? It goes to other players that maybe have bigger brands or have conventional assets, right? If I have 1 billion people on my iPhone, then maybe I can grab the entire space. So I think we're going through this period, and the question is going to be, how many years will it take before that shakeout? And can you normalize yourself? Right? I mean, the crypto exchanges are moving to normalize in regulatory jurisdictions. it's pretty clear that you're not going to be able to say, I have no headquarters, right? And therefore I'm not going to file. So, I mean, if you boil it down, I just think the upside on Bitcoin is underappreciated, and the upside on the other cryptos is overappreciated. I think the opportunity here is go long on Bitcoin. Bitcoin is a solution to every tech company and every finance company in the world. And the fact that it's decentralized property and is deemed as a commodity means it is the innovation. Everything else is speculation, and it's dangerous speculation.
Yeah. I mean, if you're referring to Bitcoin as the base layer, which I believe in, then that is exactly the case. And everything else is a risk curve. There is nothing else is the same as Bitcoin. And anybody who claims that it is lying. So you have to realize that everything else is risk curve. And risk curves operate in financial markets, always have done. People want to take more risk, and risk comes with downside, or it can come with upside.
I think you could think of it as this: the layer one, the core monetary asset is Bitcoin. It's decentralized property, decentralized energy, and a commodity. The layer twos, there's going to be a lot of maneuvering there as to whether or not the layer twos are Lightning, or whether the layer twos are another crypto network that's permissioned or not. And there's going to be continual jockeying back and forth because of the AML KYC issues around them. Can you construct a decentralized exchange and that doesn't implement AML KYC that will still be deemed as acceptable? And that's going to be a bit controversial. And the layer threes are going to be the NYDIGs and the PayPals and the Squares of the world, and the Coinbases and the Binances and the FTXs of the world. And the question is going to be, what jurisdictions will they operate on, and what range of products and services will they offer, right? Fidelity's been fairly conservative. Binance has been very aggressive. And then you've got, and Coinbase is not nearly as aggressive as Binance or FTX. But even so, Coinbase is, if you actually listen to that testimony, Gensler said Coinbase has not registered with us, even though they have dozens of tokens that may be securities, right? So from his point of view, I think he would like to see more registration from even the onshore exchanges. Coinbase does a great job of AML KYC, and a lot of tokens have been unlisted, right? Delisted from Coinbase.
Yeah.
Did you see how Uniswap delisted 100 tokens?
Did they? Don't follow it.
Yeah, about a month ago. And there's a SEC action with regard to Uniswap. I think that if you're an institutional investor and you just want to make an investment and sleep well at night and hold it for a decade or 100 years, then you buy Bitcoin. If you're a crypto venture capitalist, and if you're looking for fast 100x returns and you're willing to break all this down, maybe you go into these other spaces. But I think you have to study and parse every word that goes on between the regulators and Congress. And if you're going to be in crypto ventures, you really need to be tracking very carefully the evolving regulatory, opinions of every jurisdiction, from China to Europe to EU to, Singapore to whatever. And you got a lot more anxiety.